Good evening. Tonight, US markets are falling sharply across the board. Behind it, a variety of reasons. We can look for technicals and we can look for fundamentals. Weak corporate earnings is certainly a fundamental reason. However, wild market speculation is truly shaking the street. The name on every trader's lips is a declining video game retailer called GameStop. Now, GameStop has absolutely nothing to do with the wider economy, nor indeed with the current earnings season that's underway, of which we'll pass later. However, GameStop is soaring once again. We ended yesterday's show talking about the wild run it's having, and it's more than doubled again. Doubled in a day. Driving these gains is what's driving attention, including the White House.
Our team is, of course, our economic team, including Secretary Yellen and others, are monitoring the situation. It's a good reminder, though, that the stock market isn't the only measure of the health of our economy.
Good. And today, you shouldn't take the stock market as a barometer of the health of anything except some shenanigans and funny business. GameStop's actual business is totally irrelevant to what we're talking about tonight. It's a bricks and mortar video game shop, the sort of thing of yesteryear. However, it's in the middle of a battle between retail traders who are using Reddit and hedge funds. The funds have been betting on the share price to fall, so-called shorting the stock. The retailers, through Reddit, have fought back. They are buying shares. The funds have had to cover their shorts, and that's driven the share price even higher. Then the traders bought more options, reminiscent of the dot-com boom of the 1990s. And now some hedge funds are down for the count, cutting their losses. Does it continue like this? Other companies are starting to gather the same momentum. Nokia, BlackBerry, and the cinema chain AMC. Paul Monica is with me. Paul, this is a highly technical, in the weeds of the market, but it can be basically summed up with traditional hedge funds shorting a stock, retail investors buying it to cause them pain.
Exactly. They are squeezing the life out of the big hedge funds with this trade. The people that are very active on Reddit, the Robinhood crowd, they are simply put buying shares of GameStop, which pushes shares even higher. And that makes the bet that the short sellers are betting lose even more money. Because when you are shorting a stock, your losses are infinite. So it's a huge problem for any of the hedge funds that are in GameStop. It's why you're seeing a lot of them abandon the trade. You even had the big, short selling based research firm Citron kind of pull back on its bearish call. You are going to see, I think, more of this because now the retail investor has a taste of the power that they can wield. And you're seeing it with those stocks that you mentioned, AMC, BlackBerry. There are many others that are hated by professionals, but the individual investor loves them and also loves inflicting pain on the quote unquote fat cap hedge fund manager.
Right. But this is the problem. If those retail investors who are using chat rooms and fora in Reddit, if they don't get out, and suddenly the fundamentals of the company become the driving force of the price, the EPS, if we're going to be old-fashioned about things, then those prices are going to collapse, leaving other retail investors where?
Yeah, that is a great question. I mean, cynics would argue that the earnings don't matter anymore, that that's a relic of yesteryear, kind of like that 8-bit video game music you were playing that made the 80s kid in me like all get excited again. But that all being said, Richard, I think that a big question right now for investors is how much stronger can these stocks go up, even in the face of poor fundamentals, because it may not take much for the sentiment to change for the better. To play devil's advocate here, GameStop had a good holiday quarter, especially online. And also they have the backing now of Ryan Cohen, co-founder at Chewy, which is a wildly successful online pet store retailer. So there is some new blood coming in that could shake up GameStop, even though GameStop is closing lots of brick and mortar stores. The one in my neighborhood where my son got this little guy for Christmas, it's closing.
We will find him another one for next year.
Anyway.
The point, though, for those stocks were being shorted. Whether you love or hate the shorts, the hedges were shorting the stock because they see a weakness in the company's balance sheet and they believe the share price is heading down. Now, the reason for the short doesn't go away because somebody decides to take them on.
No, you are right. All I'm saying, though, is that the risk that a lot of short sellers face when they're going against these cult stocks is that you could have someone come in to try and save them. And I think that's what people are optimistic about with GameStop, because you have a new investor with online commerce chops. AMC, for example, another heavily shorted stock, but it just raised nearly $1 billion in funding to try and help them get through the pandemic. I think the risk here with short sellers, and they're learning this the hard way, it's one thing when you can be an accounting guru and you're looking at the nitty gritty and you see fraud like we had with Enron, like we had with WorldCom and Tyco. When you short those stocks because you think that the bottom is about to fall out of their entire business because it's built on a house of cards, that's one thing. But if you're just worried about valuations, people could have shorted Amazon in the late 90s because it was overvalued. It's now a more than $1 trillion market cap company. Companies can remain expensive for a very long time, and these Reddit investors seemingly can stay solvent a lot longer than the shorts can.